winter morning on May the 11th, 2020 for Joe Sammut Live. Thank you so much for being here. And I do apologize for being a few minutes late. Technical difficulties as par for the course with today's technology. It doesn't always work the way we want it to, but here we are. So today's topic is one of three. We're going to be reviewing credit and credit scores and credit bureaus and how they work and how they will benefit you, and probably more importantly, how they're going to hurt you if you don't manage it properly. So I have 5 or 6 questions that have been posed to me, and as you can imagine, we get a lot of questions about credit. That's one of the very first things we talk about with an individual or individuals. So these 5 questions seem to be the most prevalent of the questions that we do get. So I'm going to start with talking about what affects somebody's credit score. So first and foremost, let's realize that, or please let me drive this point home very, very clearly. Your credit score is like your signature. Your credit score is everything about you. It is everything that you have done credit-wise in the last 7 years, everybody you have applied to credit with in the last 3 years. It is your signature. So I would encourage everybody to make sure that they covet their credit, make sure that you respect your credit, and you manage your credit very, very carefully, because it is your signature that goes with you wherever you are about to embark on in your life, whether it be applying for a car, applying for a mortgage. You have to make sure that you have good credit. So what affects your credit score? Making late payments. And one of the things that we see most often is individuals that have a small balance on a credit card and they didn't think it was important enough to pay because they would just stockpile it and make a double payment next month. It sounds great in theory, but it doesn't work that well when accumulating good credit scores. So basically what you want to make sure you do is you make sure, if you can't do any more than paying your minimum, make sure you pay your minimum and do it on time. Do it every month and don't miss a month, because again, it will be those small little credit things that you didn't think were going to impact you will most certainly affect you most negatively. So again, making sure that, again, you make your payments on time. How often should you apply for credit? I would encourage you to be very aware of the fact that the more often you apply for credit, the worse it can be for your credit score, or the more it can impact your credit score negatively. One thing to be very careful of is that you don't want to be applying for credit every chance you can. So for example, you're watching late night TV and you see something online to apply for a credit card. Don't do it. Give it some thought, think about it, walk away, and then if you really need it, go back to it. If you go to a baseball game or a hockey game, don't apply for one of those credit cards so you can walk away with a team-winning towel or a team-winning puck. You want to make sure that you're applying for credit for the right reasons, not because you want a souvenir. If you are applying for a car, a loan for a car, be selective with which car you're trying to buy and apply for the credit with that one dealership or with that one brand. If you're applying for a mortgage, the one thing to be very careful of is to make sure that you don't apply too often and too randomly, which is all the more reason why you want to work with a broker. So that way the broker can pull your credit check and then have the viewers or have the lenders view your credit check. So don't be too free with your credit checks or your information. You don't want to be giving that to just anybody on the street. You want to make sure that you're being very, very selective with who it is that you're applying for credit with. And another thing, institutions. You want to make sure that the institutions that you're applying for credit with are reputable. You want to make sure that you are applying with individuals that are not going to impact your score negatively. There are types of credit out there, and it is the payday loan type things that if you're applying for that kind of credit, it most certainly will impact your credit negatively. So be very, very selective. Carrying high balances. You don't want to carry a balance or a high balance for any longer than you have to. The ideal objective would be to get your balances down to at least 30% of the credit limit. And what you want to do is do that consistently month after month. So use your credit wisely, spend it off or pay it off more wisely, and make sure that you're diligent and make sure that you're disciplined when it comes to your credit. One of the mistakes that people make is that they will rack up their credit. They will keep their whatever cash they have available to them in the bank and not pay off their credit. And they covet the bank or the money that they have in the bank because they're afraid it's going to be taken away. what you want to be very careful of is to make sure that you use that cash wisely to pay down your credit within limits that are going to impact your score quite positively. So again, it is very important for you as an individual or individuals to pay your, first and foremost, don't spend the money if you don't have it, or don't spend the money unless you know that you have the means to pay it back. And then when you get your bill, pay it back as quickly as you can. The one thing to keep in mind, again, is that if you were paying off your credit and all you did was pay the minimum monthly payments every month, I can assure you it's going to take you a lifetime to pay off that credit. So key thing is, don't rack it up if you don't have the money to pay for it. And if you do spend money on credit or spend debt on credit, then use your funds to pay it back as quickly as you possibly can. Now, one thing that we touched on, or that we touch on with clients, is don't not pay payments just because you didn't feel like making a payment. Do your very best to make the minimum payments. Don't bury your head in the sand and hope it's going to go away, because it never does. It's not going to go away. It's going to get worse if you're not careful. What gives you credit? What doesn't give you credit? Excellent question that we get asked all the time. One thing that some people rely on is their cell phone activity or their cell phone bills, their cell phone carrier to give them good credit. It will appear in your credit bureau, but it doesn't really give you all that much merit as far as a credit history or credit stability. What you want to do is you want to make sure that you have some bank credit, whether it be a car loan, a credit card, and make sure again that you pay that off quite diligently. So the key thing is, don't have too much credit, but if you are going to have credit, be very selective with the type of credit that you do have. And how would you maintain good credit? We just talked about that. Again, just make sure that you make your payments. Minimum payments are required. However, make as much of a payment as you possibly can to get those balances down. The key thing is, and this was taught to me a long time ago, when you're about to buy something, you have to ask yourself 3 questions. Do you really need it? Do you have to have it? And most importantly, how are you going to pay for it? So keep that in mind all the time. If you had credit issues in the past and your credit doesn't appear to be good, then seek advice and seek counseling on how you can get that credit repaired. Your credit will repair over time, but you can't expect it to happen overnight. It's one of those things that does take some time to repair and make sure that it is reflecting your credit history. So what you want to do, if you've had bad credit in the past, or if you've had good or bad credit, it doesn't really matter. I would encourage you to do a personal inquiry with the 2 credit bureau agencies in Canada, one being Equifax, one being TransUnion. Do a personal inquiry at least once a year so you can see and make sure that your credit is taking the path that you were intending, and make sure that there aren't other people's credit on your credit bureau, or things that aren't on your credit bureau that you should be getting credit for. So do a personal inquiry, as I wouldn't say as often as you can, but do it at least once a year so you can make sure that your credit bureau is operating in the fashion that you wish it to. The one thing that you will find is that the credit bureau or credit score companies that you see advertised online, see advertised on TV, they are a great method for you to monitor your credit monthly or regularly, just to see what your score is doing. But just please know that those scores have really nothing to do with your ability to get credit in the finance world, simply because the only credit bureau agencies that are being recognized in Canada right now are Equifax and TransUnion. So those are the 2 that you want to make sure that your credit is, again, on track with. What do lenders take away from your credit report? This is very interesting as well. Your credit history will tell everything that a lender needs to know. Who it is you're applying for credit with, or who it is you have applied for credit with, how often you pay your bills, how much of a balance do you carry based on your credit limits. So in other words, what is your utilization? Are you spending all of your money and then consolidating debt again, spending and consolidating? Or do you manage your debt wisely, whereby you pay everything off monthly? Those are the things that lenders will look at, and they will base their credit decisions on your credit score, your history, and what they see as far as trades on your credit bureau. And again, granted, they're going to be looking at your job and income and things like that as well. But you want to make sure that your credit is maintained properly. And like I said at the beginning, your credit score is your signature. Your credit history is your signature. Anybody that knows how to read a credit bureau can look at your credit bureau and tell exactly where you've been for credit, how you've maintained your credit, and perhaps what challenges you had at a certain point in your life, because everything is right there in your credit score. So maintain it very, very carefully. Again, the banks are looking at, again, how often you apply for credit. That's another thing to keep in mind. You don't want to get known as a credit seeker or a credit monger. You want to maintain a good credit profile. So we touched on all of the things that you need to know about your credit, the things that you can do to review your credit. The one thing to keep in mind is that in Canada, we have beacon scores or FICO scores, and they range anywhere between a score of 300, which is somebody that's just getting started out, all the way to a high score of 900. And your number is going to fall somewhere in the middle. So if you have a beacon score greater than 650, you're doing okay. If it's over 700 or over 800 and pushing 900, you're doing absolutely spectacular, absolutely fantastic. So your goal as an individual should be to get your beacon or FICO score up as high as you possibly can, and be proud of it, covet it, enjoy it, and make sure that it is exactly the way you intended it to be. And again, you'll be able to determine that by checking your credit scores annually through, again, Equifax or TransUnion. So that's our quick little takeaway for today. It is a very interesting topic. Credit is very much a part of your life and very much a part of your financial well-being. So maintain it, ask questions, inquire with the right people, and we're here to help. So thank you so much and enjoy your day.